So thanks for taking the time to discuss, and now we're going to move on to the next section, the introduction to Start Smart. So to just give you a bit of a background and some overview, Start Smart was created to support entrepreneurs in terms of providing them with both business and financial planning resources. So our core products that we focus on are a bookkeeping tool that's accessible both online and via SMS. We have some events that we do, monthly training sessions called the Monthly Business Deep Dive. Those are both virtual and in-person. And what we do is we bring together business owners on the first Saturday of every month, and we train them on how to use Start Smart. And we also spend some time speaking about predetermined relevant business issues. Another thing that we have planned to add to our events are networking events for entrepreneurs. One of the most important things you'll realize as you sort of make the transition into becoming an entrepreneur is that who you know is very important. People, will be able to help you out and support you as you move along in the business process, provide you with resources, suggestions, whether it is for potential customers or for suppliers to help you provide whatever good or service that you have decided to settle on. Other products and resources that we provide are Business Plan Guide, Pocket Consult, which is a mobile app that allows you to ask and have questions answered from the comfort of your mobile phone. And we also have a weekly blog that we publish just on a whole variety of issues. The blog is about 1.5 years now, and we've gotten some pretty good response from it in terms of being able to share our messaging and share some of the knowledge that we have, and also get feedback from people in terms of what follow-up questions they have and what they would like to know more about. So if you are curious about learning more about Start Smart, please visit www.startsmartgh.com. So as part of the introduction to Start Smart, one of the things that I mentioned is that we had an online bookkeeping portal. And within that bookkeeping portal, we focus on 5 key financial statements. So we have the cash book, the salary statement, the cash flow statement, the balance sheet, and the income statement. I'll spend time going through the definitions of each of the 5 of these, but we're really going to focus on the cash book and the salary statement. So that's why I've highlighted those here. So we'll start with those 2. The cash book is something that allows you to record your daily transactions, and that really focuses on revenue and expenses. So revenue being, whatever money is coming into your business. So you have a particular product or service that you sell. Let's say that you sell books. You have a bookstore. All of the money that you get from selling those books is referred to as your revenue. It's not the same thing as your profit because you haven't accounted for all the things that you need to pay for. But this is the money that you have received from providing your particular good, or if it's a service for providing your particular service. Now, when it comes to expenses, those are the costs associated with running your business. So things like rent, utilities, if you have to buy pens to use in your office to write out, receipts and whatnot, the receipt books that you buy, those are all examples of expenses. And as a business owner, these are 2 of sort of the most important groups of transactions that you can really spend the time keeping track of. If you don't know what's bringing money into your business, or you don't know what's taking money out of your business, how can you plan? For example, there are a number of kiosks in my area that I live in Accra, and there are 2 of them that are side by side, not necessarily side by side, but at opposite ends of the street. And they provide the same thing, basic provisions. They sell biscuits, Milo, the same type of thing. And I noticed that one of them had been able to expand significantly, especially over the last 3 years or so. And so, I'm familiar with both shop owners. I purchase things from them all the time. And I was really curious to see what had really made the difference because they were in the same area, got the same amounts of traffic, but one was doing a lot better than the other one. So what I came to learn was that one of them actually kept very detailed financial records. She didn't have a background in accounting. She barely had a high school education or a secondary school education, I should say. But she understood that it was important for her to know what she was spending money on to run the business and what was bringing her money, so that if there was a particular good that she knew that people liked, she would stock more of that good rather than other ones. Whereas the other business owner really didn't have much of an organized system. As far as she was concerned, as long as she was earning money, she must be making profit. She wasn't distinguishing or really understanding the fact that there were costs involved with her business. So even though she was making money, she was also spending it. And that was affecting her ability to grow. Now, when you move to the salary statement, this statement is a way of tracking the money you pay to employees, including business owners. Now, this is a particularly important point. Lots of business owners, especially people who are running one-man businesses or one-woman businesses, really believe that they do not have to pay salaries if they don't employ anybody. One mistake, though, is that as a business owner, you need to determine what your salary is. Otherwise, there's no clear distinction between, what's left over as profit and what's going to be reinvested in the business, what's going to be put away as savings for the business. If you don't draw those boundaries, all of your profit is going to become your income, and then there'll be no money left to reinvest in the business, or you'll reinvest everything and not keep any income for yourself to, sustain whatever personal needs you may have. So the other statements are the cash flow, the balance sheet, and the income statement. Very briefly, the cash flow just helps you to find out sort of how money is flowing into and out of your business and how much you are able to meet short-term cash needs. So, for example, if an emergency comes up, depending on how much cash you have on hand, now that cash, in quotes, refers to actual physical cash, money you have in bank accounts, basically money you can get to easily. If you have money stored up in other forms of investment, for example, a treasury bill, treasury bills typically have a time or a period that the money is locked up for. That is called the maturity period. If the maturity period has not come up, you cannot access your money. So your money is a lot less available to you to be able to meet those needs. So that's what cash flow talks about a little bit. It's more technical, but that's a very brief overview of it. Now, the balance sheet, again, more technical and something we're really not going to focus on this time, looks at the assets and liabilities of your business. And it always has to sort of net out or balance out to zero. Now, assets are the things that add value to your business. So, for example, property and equipment, these are all things where, they add value to your business. They make your business sort of stronger, so to speak. Whereas liabilities are things that you owe to people. So if you take out a loan, the payments you make on those loans are classified as a liability. If your company, decides to go onto the stock market and have shareholders, all of the money that you owe to your shareholders, the dividends, are all liabilities. And then you come to the income statement. And what the income statement does is, again, it's not something we'll focus on, but it's an important record. It really shows you the profits. So after you've looked at all the money that's come in and all the things that you have to pay for, what is left? Do you have positive or negative profit? And the hope is that you're going to have positive profit for your business. So again, here on the left-hand side, I've just summarized the 5 foundational financial statements, and these are all included in our bookkeeping portal. We have the entrepreneurs enter the cash book and salary statement information, but the cash flow, balance sheet, and income statement are automated, really sort of targeted at helping those who don't have an accounting background but want to be able to keep these more accurate financial records. And once you have these kinds of statements, as I spoke about earlier, you can use it to secure things like funding, whether it's loans or to convince somebody to invest in your business, or if you haven't written a business plan for your business just yet, having those statements makes it much easier to be able to do so, to really see how strong your business idea is. So again, referring back to our bookkeeping portal, we have people enter basic revenue, expense, and salary information, and the system generates the balance sheet, the income statement, and the cash flow statement. So what I want you guys to do now is to pretend that you guys are business owners. So, in your experience working with friends or family, or if you have an idea of the kind of business that you want to run in the future, I want you to do a bit of brainstorming and think about what could potential sources of revenue be. And I've written positive here because positive meaning that money is coming into the business. So think about, what you could sell or what services you could provide, and think about, this requires a little bit more research into sort of costing and whatnot. But think about, if you have a hair salon or you have a bookstore, how much would you charge people for whatever product or service you're providing? And then begin to think about the expenses. If you have a bookstore, what rent would you pay? When you get these books in stock before you sell them, you have to pay for them a lot of the time. What do you think this would cost you? So just try to imagine a little bit, put yourselves in the shoes of a potential entrepreneur, and begin to think about the kinds of revenue and costs that you might face and things that might pose potential challenges to the success of your business. So again, you can gather into groups. You can feel free to use the same groups that you did during the first breakout session. Spend about 10 to 15 minutes again, and I will see you guys soon.